it's silly to me to think that the Fed, how could they not think that there's going to be these ripple effects that are going to cause major issues, right? I mean, it's not like you're going, like Volcker went from 12 to 18%, 50% hike. Here you're going from 0.25% to 3.25%. It's a massive move.
In his most recent interview, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin, Ethereum and gold. According to Soloway, we may see the Bitcoin price up to 25K. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
When you look at things like that, Gareth, and you kind of consider the impact of what this may have on the overarching, investment markets themselves, do you think this is a big deal?
I do think if Credit Suisse did go into default, I think that would be a big event, right? I mean, we remember Lehman. I don't think we could ever forget Lehman for those of us that traded through that period. And it was a dramatic and traumatic event for the overall investing public as we saw markets collapse. What I'm fascinated by today is that we're actually seeing Credit Suisse up on the day, even in spite of all this kind of chatter over the weekend. Now, I know the heads of the company came out and defended it, but I do think all right, so check this out. The combination of this plus, and I know we'll talk about the economic data that we got today, but think about how the Fed may be forced to pivot, and could Credit Suisse be part of the reason that they're going to be forced to pivot? I do think you have to pay attention to everything right now. I mean, you look at what's gone on with the Federal Reserve, how they've raised interest rates from basically 25 basis points or 0.25% to where we currently are in such a short amount of time. And to me, it was always, and I know I came on a few weeks ago with you, we talked about this. It's silly to me to think that the Fed, how could they not think that there's going to be these ripple effects that are going to cause major issues, right? I mean, it's not like you're going, like Volcker went from 12 to 18%, 50% hike. Here you're going from 0.25% to 3.25%. It's a massive move that's going to rock the system. So again, these type of things, to me, it's going to force them to pivot. It really will. I think the next Fed meeting is the 2nd and 3rd of November or something like that. So I think that would be where we would start to see it. And I think the Fed will try to be super careful not to make it too obvious. Like, I think you're looking at a 50 basis point hike instead of a 75, which will show that they're on the down slope. But I think, again, what we're seeing is the market's already starting to price this in, which I think is amazing. For instance, 10-year yield is falling today. The stocks market is rallying. So you're already getting the market to kind of jump on this bandwagon. Now, the question is, if we rally too much, does it then kick up the inflation again because of the wealth effect? I mean, it's just like this whack-a-mole type scenario. I do think in terms of sentiment, every move down in the market, especially we just recently pierced those June lows before the bounce today on Friday, we pierced them. I do think it takes its toll on sentiment, and there's absolutely funds that are leveraged to the hilt here. So hedge fund world, it's out there. The leverage is ridiculous because, again, their job is to basically give the market or give investors a bigger return than what they could get in the S&P 500. And a lot of them have been programmed for the last multiple years that to do that, you got to leverage up because the market always buy the dip, right? Always buy the dip. And so I do think you're going to see more and more things. I heard the Vision Fund, I think they're unwinding like 30% of the people in that fund. A lot of funds are already starting to unwind because they've taken such drastic hits.
This is just getting out of whack. At some point, some of this has to start to dovetail back in and make sense from at least a financial market standpoint. Do you think this scenario with major banks actually running right up to the wall of potential bankruptcy could cause it? Or do you think it's going to take something further? Because we've always been talking about a black swan event that would really kind of solidify the market.
Yes, I would guess it's going to have to be a little bit more dramatic, but I think the dominoes are already in place. It's just, does it happen if like Credit Suisse did go under? Is that a domino that would start that chain reaction? And my guess is it would. I mean, something of that nature, but I don't think the kind of the threats right now. And I really do think that the Fed is probably paying very close attention. We know that the central bank in the Bank of England last week was starting to get involved and stuff like that. So these central banks have to be fully aware. I'm sure they're hearing from big hedge fund fund managers and big leaders out there about, our currency are doing these crazy moves. This isn't healthy. I mean, look at the bond market, insane. And again, if you're in, where do you hide in this market when it's collapsing? Because you can't go to bonds, you can't go to stocks. Crypto's not really doing much. So it's a tough market out there. And I think you get these bear market rallies, but the train tracks have been laid at this point, and I don't think there's much getting away from it. Even a Fed pivot at this point, I think it's a short-term reprieve, and then we have more pain ahead. And I think it's important for investors across the world to pay attention to mortgage rates, because that was the wealth effect, right? You talk about COVID and everyone rushing to buy homes. Interest rates were so low. Everything was, you bought a house and then in 6 months it was worth $100,000 more.
Right.
I mean, so it made people just feel so wealthy where they felt like they could go spend. So for me, it's consumer spending, right? We know the US economy runs on consumer spending, and we have to watch to see, as people run out of money from that they saved during COVID, where does that spending come from, or does it really go to the sidelines? So I think those type of things, the jobs market is going to be super key. We have the jobs report on Friday. I expect it to show a solid slowing in the jobs market, just based on the lagging effect, how we should have already seen it, but because it's lagging, it probably starts to show up. So things like that are really what I'm looking for. Economic indicators, we saw the ISM today. That really is, you could argue, kick-started the rally that the Fed is going to have to pivot, because it did weaken so much.
Pretty much being on somewhat of a tilt right now in terms of just a skyrocket. How are stablecoins playing into this? Do you think they're getting any activity whatsoever? Do you think we're going to see a little bit more of a market shift that way?
Yeah, it's a good question on the stablecoin side. I mean, for me, I'm still very cautious with the stablecoins after what we saw with Terra Luna. I do worry that some of these stablecoins, there's not enough transparency. And for me as an investor with significant amounts of capital to distribute, it makes me very conservative about putting too much money in any one stablecoin. So, I mean, I think it's worth keeping an eye on. I would mention this, and this is going to the crypto side as well, is that if you saw last week, we saw the stock market really dropping heavily, right, into quarter end. The dollar had at one point been soaring. It started to pull back. But notice how Bitcoin did not have a fall, unlike what it did previously in the previous 6 weeks or month or 2 months, really. And if I could just throw out this concept here, is that I would almost wonder if people in the UK, people in various countries where they're seeing their currency get clobbered by the dollar, potentially had been saying, let me switch some of my assets out of these like pound and into Bitcoin, because our currency is dropping so much, especially with the the Bank of England interjecting there and so forth. So I thought that was very interesting how you kind of saw this divergence where Bitcoin always was going down with the stock market and down when the dollar would go up. All of a sudden, it didn't do that. And it came right as these currencies were getting clobbered. Everything is so interconnected in this day and age that the Fed can't do what they do and not have an impact on Europe, right? So you have to believe, and hopefully they are talking, and hopefully it's not, I don't think we're at a point where it's every man for themselves, how they say it, where it's like the US is like, screw you guys and this and that. I got to believe that they are communicating, and I do think it adds credence to a Fed pivot. And again, the Fed pivot could be something as much as, hey guys, we're going to just do 50, then 25, and then wait 3 months and see where we are. But that's anything like that would be a positive for the globe, basically.
How long of effect do you feel this is going to have with these declining numbers, especially in reference to the ISM?
I think it's going to take a while. I mean, for me, the economic numbers, you'd have them artificially pumped up for so long at this point due to quantitative easing, due to stimulus from the government. So, I mean, think about just keep blowing up a balloon, blowing that up bigger and bigger, and eventually it pops. And in fact, the Fed has popped it by starting to do QT and obviously hiking rates. And so I think the economic numbers are going to be, it's going to take us a year to bottom out at minimum before we see that. And my big fear, and I think we talked about this last time, is that I'm not sure unless inflation somehow miraculously comes back to 2% or under, I don't see how the Fed will be back to printing us out of that next recession. And so I actually have projections that could have us in a recession, or at least in a sideways kind of dull kind of environment for years to come.
What are your thoughts on how your charts play out for October right now on Bitcoin?
Yeah, so I'm actually relatively optimistic on Bitcoin right now. I'll pump up my chart here so we can take a look. And what you basically have is this beautiful wedge pattern connecting the lows to the highs here as well. And you can see that we're coming to a head. So what this tells me, when you come to a wedge pattern head, it means you're either going to have a breakout or a breakdown. I think with the dollar potentially topping and the Fed potentially at a pivot point, the short-term pressure is more likely to the upside. So I actually think you'll test this high-end range here. So right over here it would be, so right in this vicinity here, which is around 20,800. And if you can clear that, then I'm in the camp of a very strong October with upside potentially maybe to about 25,000.
Where are you seeing ETH in the month of October right now?
So number one, with the most addressers or adding the new active addresses, I'm assuming that has something to do with the merge. Probably the excitement around the merge got people really involved. So that's number one. That's always good, right? The more people involved, the better. Doesn't mean price is going to go up near term, but I think longer term, that is a bullish sign. And if we take a look at the chart here, what we can see is that Ethereum is kind of hugging this lower trend line. And you got this same sort of wedge pattern. It's a little bit of a different shape than the Bitcoin one, but nonetheless, you're hugging this line here, and you want to see Ethereum hold this 1260 level right here.
Yeah.
If it can attack the upside and break out, you got an easy upside target of around 2,000 again. And again, you know, for me, it's the 2,000 level is going to be tricky because you also have the daily 200 moving average up there. But that would be kind of my near-term best up case scenario before maybe some more downside. So I think number one, October is going to be a really intriguing month. And the way I could see it playing is in the near term, we're getting this relief. We got some weaker economic data. If the jobs number comes back out a little bit lighter as well, maybe you get a continuation into next week. But then I am concerned about earnings, right? I mean, we've heard from FedEx recently. We've heard from Nike recently. I mean, there are so many nasty warnings going on. That I am concerned about earnings season coming in. Yes, stocks have taken a hit, so I think the expectations are lower at this point, but I do think for the most part, they're not low enough just yet. And I think, again, the Fed hopefully is listening to what these CEOs and these conference calls are saying, because I do think it also is a big player into whether or not they pivot. So listen, I mean, yes, I agree. Down the line, at some point, the dollar will collapse. I think the dollar, in fact, let me show you guys this chart of the DXY real quick here. I want to just show you guys this because this went right into the perfect analysis of what I was talking about. So, look at this surge up in the dollar and then look at where it halted. And all you have to do is really just draw a trend line, and it gave you where the dollar was going to pull back from. But at the same respect, you have to understand that the dollar still has a lot of downside support. And what we can do is basically draw a trend line here as well. And so, yes, I think the dollar is going to pull back here, but this line here would be the bigger break point. But even if that happens, I mean, currencies don't go from being the reserve currency of the world to collapsing overnight, right? I mean, it doesn't work that way.
I've seen fast things, but I haven't seen that one.
Right, like Rome's deterioration happened over hundreds of years until it, was no longer the superpower, just like most superpowers have. So I think it's important to recognize that it's great for headlines, and I do think the dollar eventually is no longer the reserve currency. But to say, I mean, it's going to collapse, I mean, what's the trigger for that? I mean, if the Fed is printing again, so is every other major, economy in the world. The ECB would be doing that. So would the Bank of, so it's tricky. Long term, I just love gold. I mean, I've hypothesized that, you see the pound trading almost at par with the dollar, the euro trading at par with the dollar. I mean, you almost could create a world currency amongst these bigger countries and then kind of have that supplant the US dollar. And again, I don't think the US government would want that just yet. But for me, it's if you look at history at how long reserve currencies lasted, we're at the end of that cusp as a reserve currency from when it started. And I think that's something people overlook. I mean, you can look at England when they had it, or when France. I mean, there's so many different reserve currencies. But the point again is that what happens with reserve currencies is that the governments that have them take advantage of that by printing too much, and that is the downfall of the reserve currency. Eventually, people get fed up with it, and they're like, "Well, why am I buying your debt if you're just going to keep printing?"
Yeah, exactly, for sure. Gareth, are you in any trades right now? How are you kind of playing the current volatility that's happening today?
Yeah, so I definitely am in trades. I've been in gold. I'm loving the gold move today, folks. I mean, holy cow, about time. You guys know I've been a big fan of gold for quite some time, and we're finally seeing
Show
the
us a
crack on the
gold
dollar.
chart. Let's really get the audience stirred up.
Look at that candle today. Yep. So just on gold alone, this is the trend line I'm watching. It's a beautiful trend line from the all-time high up here, which was that double top going back to 2020. So if we can break above that, that would get me even more excited. Right now, we're just trading in this range, but if we could get above there, that would be exciting. The move on silver, by the way, holy cow. Look at that move on silver. That's a nice little short
completely broke out.
9%, what would cause, I mean, silver.
What would cause silver to move like that? Because this is something we haven't seen in quite some time.
I did hear that silver squeeze was trending on Twitter over the weekend. So maybe some buyers coming out of the woodwork in that respect. And I also think a Fed pivot is not only important for bringing rates down, but it stabilizes the global economy, right? And I think the global economy, then that means the industrial demand for silver can increase as well, or at least get back on its feet. So I think that's part of it as well, is that the Fed pivot works on multiple levels, right? So Fed pivot works for gold and silver because they're a store of safety. So if the dollar declines, and then on the industrial side as well, it works.
Yeah, for sure. I have one more topic here on XRP. Obviously, we saw a big jump in XRP, almost as much as what we saw with silver, if you kind of compare. But obviously, we've got a kind of a head-to-head face-off here with Gensler and Garlinghouse. But jumping 9%, XRP, we've been looking at this for quite some time. Sentiment has been trending up. Even at the current state in which it's in, which is a little bit kind of wobbly overall. What are your thoughts on where XRP might be heading right now?
Yeah, so I think as XRP goes, I mean, this is a lot more positive, what we saw here recently. So take a look at this chart. I think last time we talked about this huge wedge pattern, right? And look at what happened. Broke above it and you just ripped. And then again, just to show the beauty of how charts work, look at these pivot lows over here and then just put a trend line and you can see exactly where it stopped. But what's nice here is that it's holding a lot of these gains. It's going sideways, it's chopping, and that is bullish consolidation. Now again, anytime you come into a big decision by a judge or any individual, there's nothing that's guaranteed. We know that there's nothing in investing that's ever guaranteed, but it's certainly the price action is better than what it could have been. And I think that's the positive that you take away from it, that it is definitely a nice looking chart right now.